everybody. Welcome to your weekend edition. Cheers and happy friggin' Friday. Man, what a wild week this one has been. We got so much to talk about. Big shout out to Simon, Big Ab, Kev, Terry, Les Gold, and Tom Messina. Good to have you guys starting off the show. I'm sure there'll be plenty others in here like Vernon just joining us, so welcome. I want to give a big shout out to something I did this morning. You guys may have seen, I tweeted it out. I was invited by Caravan Stylist Studios with Janine Justin and Claudia DeSoto to do kind of a panel discussion on some of the newer projects out there with regards to charitable donations and cryptocurrencies. Now, I thought it was kind of interesting hearing that Michael Hanna, who is the Chief Marketing Officer for the Milk Token, was on there, as well as Paul Turner, who's the Director of Food for Life Global. And Food for Life Global, just so you know, over the course of their business career has done like $8 billion worth of food to people who need it. And I think it's just a phenomenal project. And what's interesting is, in this discussion, learning that there's multiple protocols in the cryptocurrency world. And I think most of us understand that there's all these different projects. So one company might be trying to be a lender of sorts. Another one might be being an oracle, meaning they're providing data to different smart contracts. Another one might just be a store of value like Bitcoin, or performing different tasks out there in the marketplace. And what the milk and butter tokens do to reward you for providing liquidity to their ecosystem, they actually pay out in a premium of 5% that is donated to charities through the Butter token. And you can vote on where you want that money to go. And I was like, man, what a great idea. So you can actually have some sort of philanthropic back end to your cryptocurrency. And to this point, they're donating tens of thousands of dollars to these different charities. And I thought, this is a good thing. There's not enough good stories out there. I'm going to probably do a special show next week that I need to do a bunch of more research on it, but I think I'm going to call it, let's nominate Vitalik Buterin for the Nobel Peace Prize. I don't know if you guys caught it, but this guy's just donated $1 billion of his own money to India, COVID relief, right? Helping out over there. It's like, why don't our governments do that? And here's a guy who's going, I have some cash, I'll do these types of things. So there's good people going on there, the crypto space. It was interesting to see the milk and butter token guys on there and explaining their project. I liked it. It was rather interesting, and maybe I'll talk more, maybe even get them on the show here in the near future for that. I have not looked at Don Key Finance, but there's so many different ones out there. I feel bad sometimes because a lot of you are saying, hey, what do you think of this one? What do you think of this one? And most of them I know a bit about and I've heard about, but boy, there's so many things popping up every day. I think I mentioned there's over 9,000 different cryptocurrencies and tokens at this point, and I'll tell you what, that's just going to increase every single day. So let's all raise a glass, or if you're drinking, this is apple juice, by the way, just in case you're wondering, to our weekend. It is a trading week wrap-up. I was trying to find a cool graphic for this one, but I think that this is representative of what we're going through right now, which is the dollar not necessarily rising, but inflation starting to rise. So that will be kind of the topic for today. Now, I also want to give a big shout out to everybody who is continuing on with our May challenge. I tell you, it seemed like it was getting easier, but it is still challenging. And Pepe, I added you in there. You got 50 push-ups, 100 crunches to do today, buddy. Hopefully you guys are all sticking with your May challenge. And Elia, good to have you with us. If you are new, hit that subscribe button. As you know, I do this show just about every single day, Monday through Friday. Now, I'm going to go into the economic announcements right now just so you guys can see where my areas of concern are. Certainly, these markets were rip-roaring today. S&P up 1.49%. NASDAQ was up 2.2%. You have the Russell up 2.6%. Just great days from a bullish perspective. Big F. Yes, all that damn sugar. All of this bullish market action, but if you look at this list here, this retail sales numbers, look at some of this data here. Capacity utilization rate, not that critical. Industrial production slowed significantly, right? Previous month over month was 2.4. We expected 0.9%. So the market was expecting a slowdown, but man, it missed that pretty good. It was only 0.7, so we're basically 25% of our previous number. That's not really good, but it's the retail sales numbers that has me concerned. You'll notice that the retail sales overall went from 10.7%. They expected a sharp decline to 1%. We came out at 0, meaning all these people talking about buying and spending money, no increase in retail sales numbers. Again, I know Brendan would be saying, all that data is lies. It's all lies. It might very well be, but regardless, this is what a lot of people are acting on. Yes, sugar is poison, guys, but I'm pretty sure that there's a little there's some sugar in my special apple juice over here. By the way, it's Michter's, if you might wonder which bourbon I'm drinking today. So You couple this with the CPI numbers we had with the PPI numbers, which were not good from an inflation perspective. It's kind of interesting when you look and see this market rock like it did today. And maybe I'll start off and run through here those 7 markets. Now it's going to be changed because some of these futures were after hour adjustments, but we'll start at the bottom. You know, you've got the gold on a daily time frame looking good, right? We broke above that downward trend line. I'm going to put an oval. You guys know I love my rectangles. I'm going to do a little bit different one here today. Make sure I turn that off, and we'll put it right through here. This area, there aren't any really strong supply levels on the gold chart up until, in my opinion, about 1950. So right now we're 1844 on the gold futures chart, and that yellow oval over there, that to me is where we're going to start to get a little bit of challenge for gold, but there isn't any really clear, definitive, strong point where I would be concerned with. The only one that really jumps off the chart may be right around 1866, and we're not too far off from that. But hey, we talked about this. I actually expected a retest of 1800. We sold off a little, but didn't really get that 1800 retest. It's looking great right now. I think you are looking at a better uptrend here for gold. I'm sure that's music to Brendan's ears. And you know, we talk about the trend lines here. He says we broke out on the weekly. This is where it gets really challenging, right? Where do you draw your trend lines? If you're drawing through the tails, we haven't broken it. If you're drawing through the bodies, which we can adjust this one right here, something more along the lines of this, we have broken it. And again, I've told you guys in the past, I technically prefer going through the bodies. The tails sometimes just change things and distract me from it. So I do like where we're at right now. Certainly that 1866 mark, we get above that, and I think you got a much better chance of this thing really challenging those all-time highs. So looking pretty darn good there on the gold perspective. Now the S&P 500 is the one that was very interesting on the daily. Let's go to the .D. Yesterday we rallied back up into an area that I was like, okay, well, we rolled right back up into that supply level, which was demand a week ago, and I thought, well, it really depends on what happens on today's trading. I actually expected there to be some sell-off because of the news that came out. Good news is I didn't get caught on any bad trades. But we had a really nice move up today to the tune of about 1.61% for the S&P 500. All in all, if someone's going to ask me which way do I think the market's going to go, at this point, I just don't know. To me, we're in the middle of what some people might call a megaphone pattern, right? They name everything out there. I'll just draw it. So you have this one, it's called a broadening formation, where you're kind of seeing it stretch out like that. You're dead center of it. So not that big of a deal, in my opinion, if you ask me. So right now, I would say I'm optimistic simply because the overall picture is the Fed and the Treasury is still going to pump more money into it, even though we start to see some bad data. But there's got to be a break point where you say, I'm out, I'm moving on. At least maybe even go short. Here's your gold or Bitcoin price chart. Love it. Remember, we came right back down to those lows we saw just about 2 weeks ago on Bitcoin, bounced off of it. Right now, you're at 49.2 for the futures. You know, it's still not good compared to that 6,500 mark or 65,000 mark we hit several weeks back, but, you know, we'll probably get there. Elon Musk will probably change his tune here soon when he realizes that Dogecoin is actually a proof-of-work token just like Bitcoin and consumes power, but it's a very weak and unsecure cryptocurrency. That's a story for another day. Number 3 on our list was the NASDAQ 100, 2.27% gain. Just smoking to the upside today. It's funny because we have this this line drawn in here as being a retest point if it bounces back up to about 13,379. We close at 13,398, so call it 14,000 on the NASDAQ. Looking great just for the day, in my opinion. I still think that this is a pullback into a supply level and potentially more weakness here in technology, and I actually expect the NASDAQ to not make it all the way up to that 13.7 mark. All right, let's go to our final one, or actually we got last two, Russell 2000. To me, the story has not changed here with Russell. We did break down below this upward trend line that we had, but it's still really just traversing sideways for 4 or 5 months. Boring, move on to something better. Now, something better, crude oil. And this is one I think you should all be paying attention to. Way to go, Shinobi. BTMFD. I will let you guys fill in the blanks on that one. This is an ascending triangle and one that I'll be watching next week. You know, you had that bounce off of the trend line today, or yesterday and today, really. Higher lows, highs staying the same. That's pressure. Pressure looks like it's building here for crude oil. You're hearing about pipeline disruptions and crazy demand. And I apologize for my, again, condescending remarks, but these complete freaking morons filling up Ziploc bags with gasoline define stupid. Even Darwin would have to hold his head in his hands and go, the hell is wrong with you people? You're filling up garbage bags with gasoline? You realize it's going to eat right through that. Morons. Anyway, as Ron Watt would say, you can't fix stupid. Like you need that much gas that little Tupperware container is gonna save your ass. I don't believe what people are doing. But I think you'll see crude oil break to this one way or another. It does feel to me like you're gonna see it possibly break to the upside, just given that great, powerful trend that we have. If we look longer term, go to the weekly, you'll see that once we get through that, you got a pretty nice jump up to about 72. So, $7 from now, once it breaks above that line, let's call it $67, then you're looking at a $5 move on a breakout trade, which is plenty of opportunity in my opinion. Now, what else did I want to go into on that with crude oil? There were some other things. No, I think that pretty much does it for the overview of our market. So let me go back to listener questions. And again, I have stuff, they're all across the board with regards to areas of interest. And again, I always encourage you guys to send me in comments and questions at TraderMerlin@gmail.com. I'm happy to bring those on to pretty much any day I can. Next week, I'm still planning out my guest schedule, so I'll probably have a couple days where I don't have a guest, which means I will go off on tangents on my own, unless you steer me in a direction that you like. Most of the questions that came in the last 24 hours from you guys have been predominantly crypto. I don't want to make this an exclusive crypto show. I'm going to start off with some of the equity side of things. I have some questions around that, and then I will, at the end, digress and go into the crypto questions. But if you have equity market things, Forex, futures, let's talk about that as well. Now, there's been a bunch of questions about me asking, am I going to be teaching classes on cryptocurrency for OTA? We're in discussions right now with that. I will tell you this, that mid next week, I will have a definitive as to where I will be building cryptocurrency classes, but I am going to be building cryptocurrency classes specifically. Just not sure who, what, where, why, and when, but it's going to start pretty soon. I'll let you guys know ASAP on that one, hopefully next week. Okay, let's go to list of questions. This is one that came in last week from Adam, and it's a good one. When we talked about building that long-term portfolio perspective with Paul Orm, this one came in and says, what are your thoughts on having whole or universal life insurance as part of your retirement plan? I absolutely agree with it. I think you should have it. But what I want to encourage you to do is, if you're thinking about having that as part of your portfolio, don't rush out and just jump into a specific life insurance policy, because you have whole, you've got term, you got universal, there's variable, there's all sorts of variations of life insurance policies, and done correctly, they can be a tremendous value to your portfolio, especially from the perspective of generating income streams here and pulling money out of these life insurance policies. Now, I am not an expert on that, but I do have a couple friends who are in that space, knee deep in it, that I think have a lot of integrity. People like Justin Krebs, we'll maybe get him back on the program and talk about it. But I think as you map out your long-term account, right? I think we all need to have, people hate when you use these terms, but 2 buckets. I've got my active trading buckets, and then I have my long-term wealth accumulation bucket, which in theory should be bigger. I will be totally transparent. My short-term bucket is way bigger because I'm trying to build as much as I can for now. But if you have poor risk management, don't do that. Keep your big bucket safe. Don't put it in really risky things. But life insurance, I think, will ultimately be a piece for me. And the reason is this. I know that if I buy a specific life insurance product, I can dictate in there, depending on how much capital I put in or what policy I get, that at a certain point in time, I'm going to pull out, let's say, $1,000 a month out of this life insurance policy. Now, as we talked about with Paul Orm, one of the critical things for anybody is not how much money you have in your 401k or an IRA. Well, I got $5 million in my IRA. Great. Well, if your expenses are $50,000 a month, that $5 million might not last you the rest of your life, right? Depends on what your expenses are. But if I know that my net expenses are $3,000 a month anticipated during retirement, and I can now lock in by buying into a specific life insurance policy, let's say I get $1,000 a month out of that. Well, now I have to really only worry about $2,000 a month from other sources, and I can start to plan those income streams. And to me, that's where you really set up your long-term wealth appreciation and growth. And Brennan's right. There are no safe investments. There are safer investments. And generally, those safer ones don't pay you a nice rate of return. So you can actually get guaranteed rates of return through some of these life insurance products and annuities. I think as you're balancing them out, look for life insurance versus annuities and see, again, which one fits you best. For anybody who's thinking along those lines, I would highly encourage you, again, before you sit down with a life insurance person or an annuity individual, you got to remember one thing. Generally, those individuals are there to sell you. They're going to get paid to tell you what you want to hear. So educate yourself about how these instruments work beforehand, so when you sit down, you can call them out on their BS and go, no, that doesn't work that way, or no, that yield is unreasonable, or these are too high of fees. Got to know that going in there. So let's go. How's the token going? Alan, I've kind of not been doing it. I've just been so many other things on my mind right now. I'm looking forward. Brendan, are you talking about Charles Hoskinson? Gives you a bad vibe? Really? I think that guy, I like the guy. I think he's very dedicated to what he does, but I've actually been looking at maybe getting him on the show to talk about Cardano and how Cardano functions. And again, for those of you who have questions specifically to me, just do question marks in the chat before it so I know which one, like Fink just did. He says, Bitcoin power consumption is too much relative to Visa and MasterCard's server stations. Sure, it's definitely much higher than what Bitcoin and Visa are doing right now. But remember, here's the challenge that it's simple math. Visa's doing hundreds of millions of transactions and using a lot of power. But because they do so many transactions, if you look at electricity usage per transaction, it's very low. Bitcoin's doing almost no transactions, less than 1 million transactions in a 24-hour period, but the power consumption's massive. Now, if we go from 1 million transactions to 10 million transactions for Bitcoin, will it utilize more electricity? No, it will not. It's still going to operate with the same amount of electricity. The number of transactions doesn't impact energy consumption. So if all of a sudden we take that, you have all this, 141 terawatts or some crazy gigawatts of power being consumed by Bitcoin, the more transactions we do, the more that ratio changes. So, to me, this whole dynamic of energy consumption per transaction is a misnomer, because I could, if I wanted to, spoof the system and put in tens of thousands of just test transactions in the system, and all of a sudden you bring down my cost per transaction, and it's artificial. You can look at what EOS has been doing. They've been just running the test environments on their cryptocurrency, and they were doing something like 6-8 million transactions per day. If Bitcoin did that for a little bit, all of a sudden your cost per transaction would drop immensely. It's a little bit of fudging the system a little bit, but it is what it is. Shinobi says, how do you find supply and demand trading works with crypto? Seems to be working well for me. I think it works great. It's interesting because at the beginning of all this, that's a great one, Brian, I didn't think it would work as well. And here's why. The cornerstone of core strategy, which is what Online Trading Academy teaches, is, look, institutions leave footprints in the marketplace. They can't go to a market and decide to buy 50,000 shares of a stock for a customer and not move the market, or have people see the reaction on the price chart. So if we can look at price charts, we can effectively identify where those institutions are most likely lining up. And it's a summation of many things. It's the way the price moves out of it. It's how price acts when it's in these specific zones, volume, and things like that. If you look at crypto, my argument has been that I don't believe that there is actually significant institutional involvement yet. So now the question is, are those footprints that we see on a cryptocurrency price chart, are those because of retail investors or institutions? For the last few years, I would say it's been retail investors leaving those footprints. But remember, retail investors think in predictable patterns, right? If I, for example, just to have some fun here, if everybody here would do me a favor, we got only 44 people, it's light for our weekend edition, but I want you to all just get ready on your keyboard and type in the first number that comes to your mind, right? Type in any number that you want on your keyboard. There's a methodology or a method that our brains think in. So go for it. Type it on in. I should see numbers scrolling by here, and you guys can all check it out now. When you look at your results, which should be coming up here shortly, most of you, and I haven't seen any of the results yet, except those that maybe are going to know this because I've asked you for it before, most of you are going to type in whole numbers. 50, 200, 6,852. A lot of people are doing whole number psychology. They're not going to buy these fragmented little pieces of Bitcoins like Shinobi Brian. You know me. See, you had to ruin it right off the bat, Shinobi. But yeah, most people don't think like that. No one's going to sell at 8.7329. Most people are going to sell at whole numbers. So what's interesting with supply and demand perspective is, as you guys look at your results, price charts you'll see at whole numbers, especially with the big numbers. This is why, David Warner in his signature series talks about the dimes or the quarters strategy, right? Which is basically saying people think in whole numbers. Therefore, I'm looking for these whole numbers because that's where they're naturally going to gravitate towards, right? Why do we look and see a pair of a pack of gum at 99 cents instead of $1? because it's more appealing for us to be right before. It's too much, too expensive we get to that $1. So where do you expect people to start to sell shares? Is it when it hits 40,000 on the dot? Most retail people will. That's why you want to sell right before it gets there and utilize the retail population. Now, it's actually been working better than I anticipated, especially for breakouts. I mean, you see it happen very clearly with a lot of these cryptos where it'll come to a level, it bounces down, and all of a sudden just rips right through. To me, that it's pretty important to play human behavior and psychology on these price charts. So yes, I definitely see those footprints, but it's not as big. I think you're starting to get more more institutional involvement in. And then when that happens, not only are we going to see, I think, greater response to supply and demand zones or better zones created, but much higher prices because those are net buyers, right? Institutions are generally encouraging their customers to buy assets, not sell them or short them, which should be a great catalyst for more upside movement in the crypto markets. Okay, so I did Adam's question here on retirement, life insurance, part of my plan. This next one cracked me up a little bit, and thank you for Ethan for sending it in. It's rather comical. It says, Merlin, throw me a bone. Give me one trade setup you like for next week, please. Well, I think I kind of did already. I mean, I like the crude oil setup, but that's going to take some time. It might happen next week from a breakout perspective. It might not. There was one in particular. I think it was Philip Morris. Let me bring up PM that I was checking aftermarket today. Let's look at this on a daily. I really like this one, and I know it seems weird. I normally don't trade Philip Morris. I generally don't trade NYSE stocks, to be honest. Daniel, what am I drinking today? Just for posterity and make sure all the regulators are checking. This is apple juice. No, it's Michter's. Michter's has been one of my favorite bourbons. I don't know why, but Michter's it is. Okay, so go to Ethan's question here on throw me a bone here. Here's one that I'm keeping an eye on. There wasn't too many great setups that I like, but I'm a big fan of chart patterns. What you have here is a double top. It's a very short-term one, right? We sold off aggressively for 2 days and then ripped right back up to this high, and then you have this little bit of a shooting star. So it's an easy no-brainer for me. I'll set an alert. And if I can get below, let me get this snap mode on here. If I can get below this price right here, so it has to open up above 97.64 tomorrow or Monday for Philip Morris. If it opens up anywhere above 97.64 on Monday and then starts to break down below 97.64, then I'm looking to go short. And I know it's going counter trend here. The only thing that I wish was different about this is I wish that we had a much higher volume spike on today's trading for this Friday. You can see it's actually relatively low volume. So that makes me somewhat nervous about this, but that's just one of the things I'm looking at. I didn't see too many bullish patterns, but I'm definitely looking for a potential short here as I believe this inflation is going to be a bigger issue. Hello, Christopher. Good to have you with us. Let's see. What else do I have? Merlin, Bitcoin was 4,000 in 2019, so Ethereum 50,000 in 2 years. 50,000 in 2 years? I mean, I don't think that you're comparing apples to oranges, right? They're two very different things. One is defined and outlined as a peer-to-peer payment system. That's Bitcoin. Ethereum was not really designed to be a peer-to-peer payment system at all. It's really more to be a programmable blockchain. And Ethereum at this point is the forefront. And if I could encourage you guys to entertain yourselves this weekend and just go look up presentations by Vitalik Buterin. This guy, to me, is one of the most brilliant people on earth. You can tell he's on the spectrum. I'm pretty sure he's on the spectrum. But there's an air of brilliance I haven't seen in a long time. And this guy has such altruism and visions for the global community, both from a monetary system, but also for how we treat one another and the things that we can do to make this world a better place, from global warming and all that type of stuff. It's just brilliant. So comparing Bitcoin to Ethereum, I think, is very, very different. Could Ethereum hit 50,000? Absolutely. The challenge there is if it hits, 50,000, you're looking at a monster market cap, but it's still very doable. I mean, right now, I haven't even looked at it recently, but let me just real quickly for giggles and the audience out here today, go out to World Coin Index. No, I'm not sponsored by World Coin Index. I'm not sponsored by anybody. Give me some sponsorship. Let me make a couple bucks on this damn show. Here is World Coin Index, and I'll just for giggles, you look at Ethereum, which is now one of the most popular ones. It was been number 2 for a long time. It has a market cap currently of 466 billion. Now, here's the challenge. If you think that Ethereum is going to be at 50,000 in 2 years, then you're looking at a market cap that's going to be about $5 trillion market cap. That would be, in my opinion, that would be a little bit of a stretch. It's just a monster market cap. I mean, considering things like Apple are only just slightly over 2 trillion, you think Ethereum's going to be over 5 trillion? That's a bit of a stretch. Brendan's been in here hammering the table for the past few months saying, Ethereum 5,000 by the end of the year. I think he's probably going to reevaluate, aren't you, Brendan? I think that certainly 5,000 by the end of the month, Ethereum could be at 5,000. I think 10,000 is probably a pretty good target for the end of the year. And I agree with Brendan here. If they can fix their scaling issue, and if they can successfully go from proof of work to proof of stake, therefore you reduce a lot of your energy cost, and then you can do scalability changes, and there's a bunch of those in the pipeline, and get to the point where they can now ramp up, instead of doing 1 million transactions every 24 hours, get to, let's say, 10 million. Now, all of a sudden, I think Ethereum has a potential to, I don't know, about 50,000 in 2 years. That's a pretty big jump, but I definitely think that there's a much higher ceiling for it. Absolutely. Let's see. Gretchen, question mark. Years ago, I put some crypto in Binance, and now I can't get back on it. Any suggestions? Yes, you can. There's a lot of people that have this problem. I actually had a problem for about 2 months getting back into my Binance account. Just keep pounding them. They're actually pretty good with their support, I have to say. So I would just keep contacting them and submitting. It took 3 submissions for me to get a response where somebody actually worked with me, and then it was pretty simple to access my account and get back online. Once you do that to the Binance.com website, you need to open up Binance.us and move those assets over there, or move your assets to another exchange, because Binance.com, if you're an American, you're not allowed to use that site. Gotta love that one. Live in Florida. Heard you said Americans can go to Binance.us, but how do I transfer such over to Coinbase? Easy. Very easy. I could actually show you in Binance. You go to your cryptocurrency, wherever it's at, in the folder, and say send. And you just click on the send, and then you go to where you want it to arrive at, let's say your Coinbase account, and then it says receive. You copy the receive address, and you paste it in the Binance account, and say, that's where I want you to send it to. I personally, if it's a big amount, I would recommend doing it with let's say you have 5 Bitcoin or something. I would do it with like 0.001 Bitcoin first, just to make sure you're doing it right. Always check the beginning and ending numbers on the addresses so you get all the information right. But do a test first, because if you screw up, it's gone forever. Chrisley, I have a question for you. When you use TradingView and I look up cryptocurrencies such as Bitcoin, different brokers have different charts and prices. In stock, yes. No, in stocks, no. So it's a great question, Chris. Thank you so much. In a centralized marketplace, futures, equities, options, right? If they're the typical markets, those are centralized. So if you pull up an E-Trade, an Ameritrade, a TradeStation, Thinkorswim, and you looked up the price of Microsoft, it's the same on all of them, right? Because they're all pulling the data from the same point. If I pull up, and here's a great example. Let me see if I can show you on Ethereum right now. Here is, as we speak, the prices of Ethereum on different exchanges. And I know it's kind of hard to see, but you see Binance right now has Ethereum at 4,029.69. And you look down here at Upbit, 4,024.27. That's a $5 difference. Now, it's not a huge difference, but these, remember, are decentralized exchanges. So each exchange, Binance, Huobi, BitZ, Coinbase, Coinbase, they're all going to have their own prices based off their community of buyers and sellers. So you could see all of a sudden price drop very quickly at Coinbase, but it doesn't move at Binance yet. Now, what's set up right now are massive systems behind the scenes that none of us can see, which are arbitrage networks, where if all of a sudden Binance's price is 5% cheaper than Coinbase, they're automatically buying everything they can at Binance to drive that price back up, and they'll go and sell it on a more expensive exchange. So buy everything that's undervalued and flip it and sell it. Arbitrage is a big place. Most of it's automated in the back end to keep these prices relatively close. In that Ethereum example I just gave you, where it was a $5 difference, not really that big of a deal. There's commissions and fees, so they wouldn't make a lot of money. But I'll tell you, back in 2017, these spreads were over $1,000. And if you could just arbitrage that, it's free money. So these prices are definitely going to be different, Chris. It's pretty much the same as looking at spot Forex markets, right? So if you have an FX Pro account, or you have all of a sudden I drew my blank, TradeStation, or you have different crypto or spot forex accounts, then you are going to have different quotes at different places. That's just the nature of the beast, and that's kind of the same with crypto. That's why I mentioned if you are trading a specific cryptocurrency, you'll want to look at something like this and see where is the main liquidity. You guys can see right here on Ethereum, the biggest exchange is by far Binance. But if you had an account on, let me just zoom down here. If you had an account at CoinEx and you wanted to trade Ethereum, you only have 32 million of traded hands in the last 24 hours. That can be a little bit dangerous. That means it's not very liquid. And remember, when we have illiquid securities, you have wider spreads, and those wider spreads usually mean bad fills. So check whatever it is that you're trading and make sure you have the right amount of liquidity to help you through it. All right, great. You guys got some good questions today. Yes, it's so funny. The Chia coin. Everybody's asking me about this one. I may have to do a special show on it at some point. But yes, it's definitely got a lot of attention over the last 24 hours for sure. ADO's below $2 as of now, I believe. Yes, I think it is. It was spiking pretty aggressively, and I think that, again, as we mentioned yesterday, the comments that Elon Musk made about looking for low energy consumption, scalable solutions, Cardano was definitely at one of the top contenders for that argument, as we mentioned on yesterday's show. So was EOS, so was Ripple, and they've all been doing pretty good. Polkadot also doing very well today. I got some comments about that we'll talk about here shortly. But yeah, Cardano right now at $1.98. All right, I brought this question up here. This is from Tom, who I believe is probably with us today. Oops, no, wrong one. Let's go to this one. Tom says, I can't picture who sells Bitcoin at $47,000 when it was at $58,000 less than 2 days earlier. Is this pure manipulation? No, I don't think it's pure manipulation. I think it's just the nature of the beast of liquidity in the marketplace. So all that has to happen is somebody sends a big sell order on Bitcoin. And when I say big sell order, it's not like I'm talking, 500,000 Bitcoin. Someone puts an order out to dump 100 Bitcoin, might move it on some of these exchanges. That's a lot of money. So you start to get this, it's not necessarily FOMO, it's that panic selling moment where all of a sudden people are going, oh crap, it's going to go a lot lower than 47, and they dump, and all of a sudden it bounces right back up. That's just the nature of trading and investing, right? It's trying not to get caught up in the emotions of it. But that's why it happens. I've had many times where I'm actually selling as something starts to drop, and I'm like, man, I think it's going to crater much further, and I'll dump it. Next thing you know, it bounces up, and you're like, oh, why did I get out? Right? Typical thing. What else do I have out here? Let's see. Oh, good one. Okay, and part of the discussion I had today in that Clubhouse session, talking with Michael Hanna, Paul Turner, Janine Justin, Claudia DeSoto, was about shit coins. There's a lot of them out there. And I think it's important that if you go back and revisit that portfolio show we did on last Wednesday, a week ago, it was saying 5% of the portfolio is for stuff that's totally speculative and potential scam. So Daryl says, what do you think of this? I know it's trash, but the possibility is just $100 or $1,000. And he's talking about Shiba Inu, right? Which I believe Shiba yesterday dropped something like, was it 90%? Because of the whole Elon Musk thing. Or sorry, not Elon Musk, the Vitalik Buterin thing, which I'll elaborate on Monday. Let's see. Here is the last 7 days of it. No, so it didn't drop that much. But the Shiba Inu chart, there it is. This is the belief system that a lot of people have. And this is why you have to understand. And this drives me crazy. I'm sure a lot of people are going to look at this and go, oh, wow, this thing could go to $1. It's trading at 0.0000019 right now. And if it just got to $1, I'd be rich. Okay. How many of you think that there is a chance, a slim chance on some great green earth that Shiba coin will get to $1? Just type in simple yes or simple no. What do you think? Shiba coin going to get to $1? It's trading right now at, I'll bring it up here, 0.000019. Can this one get to $1? Could it get to $1? What do you think? Yes or no? Now, this is why it's important, because this is the talk track that the people who are pumping Shiba Inu and others out there, they're pushing this, trying to get that story told that this thing can get to $1. And I'm right there with Shinobi. I'll even, just for the record, because I'm sure some people are going to watch this online, I'm going to add in mine. There's my answer. Hell friggin' no. It's not possible, guys. Here's why. Look at the number of coins out there. there are 394 trillion, with a T, Shiba coins. So you're telling me that Apple, one of the biggest, most successful multinational corporations known by everybody around the world, even third world countries are going, I've got an Apple Watch. They're everywhere, right? That's only got a $2 trillion market cap. Yet a coin that serves no purpose and does nothing is going to get to a market cap of $394 trillion, almost 200 times bigger than Apple. I will take anybody's bet on that one. I'll bet you my entire life savings. I'll leverage my house and give you 10 to 1 that there's no way it's going to happen. Take me up on that bet, people. I'll even give you 5 years on it. There's no way that this coin could get to that. There's not enough retail Robinhood traders or Wall Street bets guys to pump this thing up that much. You're like, oh, I'm going to put $1 million into it. $1 million into Shiba Inu is going to bump it to 0.00002, right? So, yes, Doge almost got it, and we'll talk about that here in just a second because I think that has more chance. So, if you think it's going to $1, you got to quit smoking crack, man. It's a hell of a drug. Stop. Just look at the number of tokens outstanding. It's not going to get there. No way, no chance, no how. That doesn't change the question. The question from Daryl is, what do you think of it? Well, my opinion is pretty harsh. I think it's just a scam coin. I think it's a shit coin. I think it's a pump and dump thing. Could this thing double in price? Absolutely. Could it double tomorrow? Absolutely. Could it triple by the end of the week? Absolutely. And this is why I said in the portfolio construction that you make sure that if you are putting it in gamble money, and this would be the epitome of gamble money, that it's only a small portion of your portfolio. Do not go out there and put in $50,000 of your life savings in a Shiba coin. I'd hate to see that happen because you're thinking it can't go any lower than 0.000019. Yeah, it can. Yes, it can. It can go to zero as soon as people move away from it and it falls out of favor. Right? It could go into something else. And Andre, yes. And Andre, for those of you, again, who are new, hit that subscribe button and like as well. We love to have new people join this program. Andre is right. He says every chart has supply and demand zones. 100%. And you look at this price chart here of the Shiba coin. I'm not saying that there's nothing tradable here. I'm not saying that there's not opportunity to the upside here. What I am saying is there's no way this thing's going to get to a valuation of $390 trillion, and that would put it at $1 price target. There are great supply and demand zones here which you could be trading. Just don't do it with money that you cannot afford to lose, because this thing could drop 50% one day and never come back and just keep on going down to zero as things move into something else, right? Does cryptocurrencies have supply and demand zones like stocks do? Yes, Christopher. Yes. We just talked about that. They do. I personally think they're slightly different because I do believe at this point that crypto is still a retail investor marketplace, but that is quickly changing. I think in the last 6 months, we've seen tremendous influx by institutional investors, which now make it even better for me from a supply and demand perspective, because now I can see the footprints of the big guys clearer on charts, and I think that just makes for better crypto trades. So absolutely. Boss Poopa says, I like my chances better in Las Vegas at blackjack. Yes, you know, one of the reasons I like blackjack better is A, I know I have a 49% chance of winning, and B, I get free cocktails by somebody in a scantily little dress and looking all, and we will just keep it PG-13. So yes, I'd rather go play blackjack. But I do think that if you find something that looks like it's been, you know, downtrodden and beaten up, and there is potential for it, why not, right? I am definitely one of those guys that's been beating up on Dogecoin, but I managed to make 100% of my gains in a week on Dogecoin. Can't complain against that. I'm not saying it's not tradable. I just don't believe the long term. Now, on that note, the story may be changing here with Dogecoin. So, you know, there was no development going on with Dogecoin. I recently today went out to GitHub, and all of a sudden there is tremendous amount of development going on with Dogecoin. So Elon Musk, and you guys remember I said this, 2 weeks ago? I think it was 2 weeks ago, maybe even 3 weeks ago. I said if Elon Musk gets into the program and he says, hey, I'm going to build a development team, or I'm going to be the focal point that makes it happen. Because let's be honest, Elon Musk doesn't build Teslas. He puts the people in the place to make Teslas. He puts the people in place to make SpaceX, et cetera, et cetera. He's not out there actually building Tesla. He's the visionary behind it. If he comes into Dogecoin and puts the right people in place with some serious capital, I hate to even think this, but Dogecoin could end up being the one that rules them all, right? It could end up being a major cryptocurrency player, which is shocking considering it started as an absolute joke. It's unbelievable. So I'm actually, I'm waiting for it to sell off again. I may actually buy some Dogecoin. I know, I can't believe I'm actually saying it because I'm out of Dogecoin altogether right now, but it's interesting that with the right team and the right leader and champion of something, he could actually make Dogecoin a legitimate contender for a transactional cryptocurrency. There are a lot of problems, and if it starts to look like that's shaping up, we'll go into Dogecoin and break down what some of the big problems are with that token or coin and how they can overcome some of those challenges. But yeah, I'm with Naum. Hey, Elon, and I've said this before, I don't really care which one ends up being the one that rules them all. I just want to make sure I have some of it when it finally gets to that place. That's why I'm kind of been showing you my portfolio. I don't know if I'm in all the right stuff. For example, we'll go look at another question here about cross-chain, parachain technology companies like Cosmos or Polkadot. Which one do you, or Near, which one do you choose? Either one of those three could be the one that ends up being the leader in that area. So do you buy them all, or do you buy the one you think is the best? That's a big challenge. So great question. Man, you guys got some good stuff. Elliot, sorry to change the subject, but it seems that Spaxx have been getting some heat recently since Buffett trashed them. We gotta ignore what Buffett says. I hate to say it, he is one of the greatest investors of all time, but he is not up to speed, in my opinion, with technology. And this is just a new way for things to come to market. He's a legacy guy. Thank God Charlie Munger is about out of there. Let that guy alone. But they got too much hype. I am still in VIH, and I am very disappointed with VIH. I'm going to hold it through the process, but boy, when they changed their focus and went to an app versus an exchange, it absolutely crushed it. And you see that thing's down around $10 right now, and I'm bummed because I'm in at 15. But there's a lot of SPACs that have been getting smoked lately. I think it's just the nature of the beast. They got a little bit too hot. They were the super hot topic, which I did a show earlier or mid last year where we talked about it, that these are very dangerous funds because you're putting all the speculation on the ownership or management of that SPAC to buy the right thing. And all they have to do is buy it, and they just bail out and make the money. Did they pay too much? My assumption would be in most cases they probably do. They want to make that deal happen. So they get out, take all the money, disappeared. Unfortunately, that's just the nature of the beast. Is it worth mining Doge then, do you think? I don't know. That's a great question. I was actually looking at some of the Doge mining rewards. I don't know if the numbers make sense, but, if you can do it and you can get some Dogecoin at a very low cost, less than the actual token price by mining, I would say go for it. Absolutely. I have a friend who wants to start mining the Shiba coin because that's all of a sudden become super popular. Great. Why not? Especially if you have a computer that's sitting around doing nothing. Put that thing to work. Let it do some mining for you. All right, I need a sip of whiskey. If you buy everything now, in 10 years, we will be rich. Well, and again, I think that you have the right idea, Carlos. The challenge there is not everything will move up, which is why you don't just buy one thing. You build a portfolio of them. And, I've got 20-something cryptocurrencies now, some of which were given to me by airdrops. But in that process, some of those will be great. Others will just completely disappear. And I don't know which one's which. So that's why we have to have a portfolio. But I agree with you. I think that the next 10 years, as this industry evolves and starts to make more headwinds and regulation comes in, which actually legitimizes cryptos and digital assets more, then we're off to the races. I think I think right now, consider this the ground floor. This is just the very beginning of this entire shift from on a political level and an economic level. Okay, here's one that kind of ties into our topic for today. This is from Karen, and I'm going to start to wrap things up here. Here's this: I can't light my stove with a Dogecoin. No, but you sell some Dogecoin at $1 a piece. You might be able to buy automatic lighters for your stove. Karen says, I listened to this other guy on YouTube that suggested Cosmos Atom, and that being one of the coins that has developers working on it, as well as Binance and Polkadot. I wondered what you think of this one. I have nothing against it. If you look at Cosmos, they're working on a thing that's called IBC, Inter Blockchain Communication. And what they're trying to do is very similar to what Polkadot's doing. They're using different protocols and different structures. But basically they're saying, we want to allow Ethereum's blockchain to speak to Zcash or Bitcoin and do transactions between those two where you don't necessarily have to go through an exchange. You're now cutting out the middleman again by using this protocol. And in essence, the protocol is a middleman, but we're talking much more reduced fees, but you get much better interoperability between them. So is Atom or is Cosmos? Cosmos is the protocol. Atom is the native currency of it. Is that better than Polkadot? I don't know. I don't own any Cosmos or Atom, right? But I do own Polkadot, and one of the main reasons is the staking was just so high, right? 12% for Polkadot to sit on an exchange, and I plan on holding it anyway. I'm fine and happy with that, and Polkadot's been doing actually rather well. Could I add some to my portfolio with regards to Atom? Sure, I could. I could definitely put some of that in my portfolio, but at this point I don't. But to answer your question, Karen, I don't see that one of them is clearly dominant than the other. The main reason that I like Polkadot is really because of Gavin Wood. I think Gavin Wood, who was one of the original guys over at Ethereum, I think that he just brings with him the best talent. He's one of the legends in the industry. I think for that reason is one of the main ones I went with Polkadot, but I'm not bad-mouthing Atom or Cosmos in any way. It's just I put my money into Polkadot because of Gavin Wood and because of the technology, as well as that 12% dividend, their payout. Yeah, there's a bunch, right? And that, again, Shinobi says it sounds like Solano or Link. There's Near is another one. There's so many ones competing for the same space. And let's all rewind. For those of you who are young, this might be a little bit too far back. But if we rewind and go back to the 1990s, especially the late 1990s, think of how many web companies there were trying to sell stuff. I mean, it was crazy. There's online bookstores and pet stores. They're all popping up, dozens of them, all trying to do the same thing. I think this is somewhat similar. At one point, you're probably going to get the shakeout of which one is going to be the leader. At this point, what I'm trying to do is align myself to the ones that are the most popular, right? I would argue that Polkadot is more popular than Atom or Cosmos, but it doesn't make it the leader in the long run, just right now. So I just kind of position myself with the horse that's got the best odds of winning, but that could change. And if it does, then I will pick up something else. And the question would be, well, aren't you leaving money on the table? I don't care about leaving money on the table. I'm happy to leave it on the table. If I leave $5 on the table, but I made 100, great. Who cares, right? Call it a cost of doing business. Now, if I made $5, but I left 100 on the table, now I'm kicking my own ass because I'm an idiot, right? You can't do that. But don't worry about not timing everything perfect. You don't want to be too soon to something that might never come to fruition. That's a gamble. But if something starts to gain some traction and looks like it's gaining some stability, I could make the argument that with the way Elon's talking right now, it's pretty clear that he's looking at Dogecoin. But of course, he is the biggest pump and dump guy in quite some time. Now, Alan says shitcoin's pulling down the leaders. Well, if you look at them, altcoins, we'll call them altcoins. They're some of the best performing ones in the entire crypto space. So I think it really breaks down to three categories, really. You've got Bitcoin, you have altcoins, and then you have shitcoins. And I think, to Alan's point, I think you are seeing some of these, like Shiba Inu and other ones like, what was it called, the Elon coin. These are scam coins. They're just built to hopefully make a quick buck and get people to buy into them, a pump and dump type scam. To me, that leaves a black eye on the industry. It's not a good thing for the crypto space. Unfortunately, that will bring in regulators and more issues. Hopefully that will go away, but it is part of that. Remember, in 2017, ICOs were the ugly, evil villain in the crypto space, and those have been curtailed and reined in. I think what you'll get is a lot of change here with regards to these really just pump and dump coins that serve no purpose. I agree with Brian. Altseason is here. We are full on in it right now, and it's just rocking. If you guys hear some really weird noises, it's because my German Shepherd's having dreams over there. Yoa, quit dreaming. All right, let's see. How did your research into staking Ethereum go? So the staking Ethereum, I'm not doing it. The reason for it is this. I love Ethereum. It's I would say, probably my second favorite cryptocurrency. Ethereum, if you look at staking it, you can't pull your money out until part 2 project is done. So I'm not comfortable doing that. They will not let you remove yours from the stake pool until Ethereum 2.0 is rolled out in its entirety. What if it doesn't happen? I don't see anything written in there that says, well, if a project doesn't happen or if we roll back, you get it all back at some point. So locking it up scares me. I'd much rather put it on. There's other sites where they'll pay you. For example, I would think that Celsius gives you 4.5%. I'd rather go with Celsius and make 4.5% than maybe make 7 to 10% by staking my Ethereum and being locked up for that long. Just kind of freaks me out. All right, let's see. What else do I have here? Great conversations, by the way, guys. You got a lot of great comments. Todd Olson, good to have you with us too. Yes, I finally made a live show. I'll have to watch the rest later. No questions? No oh, there you go. Why are the coins listed as two different as USD and the other's USDT? Okay, so very simple. And what you're getting here is a lot of protocols that are creating digital dollars, right? So USDT is Tether, and Tether is a pegged stable coin that's pegging itself to the US dollar. In theory, they hold dollars, but I don't know if I buy all that. But USD is you're in US dollars. So if you're at Coinbase and you sell something and you go to USD, it's literally US dollar cash sitting at Coinbase. If you go to USDT, because you can sell Bitcoin for USDT, now it's in a digital token called Tether. So that's all. The only difference there is, are you going to physical fiat currency by USD, or are you in USDT, which is Tether? Are you in USDC? I mean, there's a bunch of different stable coins out there that you can go into, and that's what that is. Alan said, but during the dot-com bubble, even the real players got crushed. Do you think that the same could happen here? I think it could happen. I think that this is slightly different, and the main reason, and I've said this before, I think the main reason you're seeing a difference with this is during the dot-com bubble, institutions started the bubble. They were all in on these web companies first. They brought them public, announced it to everybody. The retail people were left holding the bag. It comes falling down. This is the exact opposite. Cryptos have been started by the retail people, right? You didn't see Goldman Sachs or Merrill Lynch start creating currencies like Ethereum and Litecoin and EOS. No, it was just people like me with a computer going, hey, let's take this code and make our own coin. So it's been a retail population pushing this one up. Institutions are getting involved. I think that'll drive it higher, and I think that will prevent the major implosion on the big stuff that we saw back in the 2000s. So great question. Now you guys got some good stuff today. Shinobi, what's going on with your Celsius? That should actually be pretty easy to set it up. There is an issue, by the way, if you have Celsius, you have to have the latest version of the Apple operating system, or it just all of a sudden doesn't work. I had that mistake. I sent over a lot of EOS over there, and I was like, I can't access my money. I'm a little scared. But it's all fixed now. All right, last one. And Naum, since he's here with us today, I know it took me a couple days to get to this one. I apologize, my friend. It's just been so many things going on in my world. Oh, a good glass of whiskey on a Friday. Cheers to that. Naum says, where is the value in this crypto? And what it is he's looking at Yearn Finance. And some of you might know Yearn. Obviously, they had a huge spike up in value recently, and a lot of that has to do with what they do. It's basically, it's not quite yield farming. It's very close, similar to what yield farming is, but basically what you're doing is you are depositing, in most cases, it used to be stable coins. You're depositing those with Yearn, and you're getting paid a certain rate of return. So, for example, if you were to deposit, let's say, your USDC, which is a stable coin per the question that just came in, and if you have, if you deposit there, you're looking at getting 16% growth per year. Now, some of that's because you're going to get paid in the native Yearn token. That's part of the compounding of it, and also the USDC. Now, why would you get paid such an alarming rate of return? I mean, come on, you guys are, and I'm saying this as me as well, is we're keeping money in a savings account getting 0.1% interest. How the hell am I going to get 16%? Like, what? Whoa! Why would I not go there? Well, there's risk, right? One of the big changes that's going on right now is with DeFi, which I'm a huge fan of. They're creating over-collateralized loans. So let's say you have $1,000 worth of Ethereum. You would deposit your Ethereum in there, and you could pull out, in the form of stable coins, more money. So, for example, let's say we use USDC, for example. So here's the USDC. I'm going to deposit USDC in this account, and I'm going to be getting 16% interest on it. They are lending out. This Yearn is going out and actually going to different pools and getting greater liquidity. They're also creating loan structures behind the scenes or interacting with companies that are selling loans. they're also going to give me the ability, if I deposit here, to pull out some money. Meaning if I deposit, let's say $20,000 worth of USDC, depending on the margin rate, I could pull out, let's say, if I put in $20,000, I could pull out $10,000. So it's over collateralized, meaning I'm putting in more crypto than I am actually pulling out for the loan. But what a lot of people would do is they would now come back with that USDC, deposit that $10,000 loan. They're going to be making 10% or 16% of that $10,000 crypto loan, and they now pull out another $5,000, and then they deposit $2,500 of that. And you can see that it becomes fractional reserve lending that we can do. So instead of the banks doing fractional reserve lending with your money and keeping a small percentage of your money at your Wells Fargo, Chase, etc., you can now do the same thing using things like Yearn. And I think it's just gained a lot of popularity, a lot of people realizing that DeFi offers tremendous value for us, for me, for you guys. To me, this fundamentally changes the way we think about investing. Think about it. I'm a financial advisor. I'm for those on the radio, I'm being extremely sarcastic right now. I am not a financial advisor, but let's just pretend you come into my office. Hello, Mr. Rothfeld. It's great to see you today. What do you think about long-term investments? Well, based off your capital, I believe that you should be earning an 8% rate of return on your portfolio through your retirement, and therefore, you'll sustain it all the way through until your final days. Well, I'm going to be really working diligently to create a portfolio that's going to get me 8% per year. But now all of a sudden I can find something that looks like it's going to pay me 16%, or like my Polkadot's going to pay me 12%. It changes the landscape of how assets are generated and wealth is generated, in my opinion. And, while there is tremendous risk in some of these, like you look down this list, I'm not sure what all the CRVs, those are usually native tokens to that ecosystem, but, DAI coin, I can get 13.5%. DAI is a stable coin, guys. DAI is a stable coin. So all of a sudden, I could deposit a stable coin here, which is supposed to be pegged to a dollar, not really change much, and I'm going to get 13.5%. You know what this makes me want to do? It makes me want to go down to Chase, pull out every penny I have in my savings account, buy a bunch of DAI with it, and boom, dump it in here and make 13.56%. You got to be careful because there is risk involved. This is not insured. That's why we get such low rates, is because that's risk-free money, right? It's saved by the FDIC, right? Your deposits are insured up to a certain amount. Not with crypto. So that, unfortunately, is the big danger. But, it's interesting because it's so new that it's uncharted territory. I assure you regulators are going to come in, and this is going to be one of the areas that they're focusing on is, hey, wait a minute, how can you go out there and promise somebody that you're going to give them 63% rate of return? Like, wow. That's a massive rate of return. So, you got to be careful with this stuff, but that's one of the reasons Yearn Finance is just taking off, is the utility of the site. Makes it very easy. They also have an algorithm in the back end that will search when you deposit your cryptos to get the best rates out there. So that's one of the advantages they give you. Anyway, holy cow. Shinobi, research is still going. No, I did find a couple that were doing well over 50,000% per year. They're doing 6% a day interest, which is just absolutely ridiculous. But I'm having problems getting in there. Most of them are going to be on the Binance Smart Chain now, not on Ethereum's. There are a bunch that are on the Ethereum blockchain, but Ethereum's fees were so unbelievably high, it just didn't make any sense for me to stick with it. So, all right, I got 2 minutes to wrap this one up. I'm talking about going an hour today. Boy, goodness gracious. Here's what I have for Monday. You notice the calendar here, quite a bit of stuff going on. You have Empire State Manufacturing Index for the U.S., NAHB Housing Market Index as well. A lot of FOMC members, Bostic, Clarita will be speaking next week, so pay attention to those. That could create some ripples. Also, one of interest is the TIC long-term purchases. That's going to happen about 1 p.m. on Monday, so right near the end of the market session. Other than that, not a lot of big stuff. You're trading the pound. You do have the unemployment rate, so keep your eye on that one. Well, that is pretty much it. Yes, Chris, there are starting to be crypto insurance companies are popping up. That is something that's developing as we speak. Some exchanges are out there already offering it, but it's kind of a new thing. So as that grows, we'll probably talk more about it. Cool. That's going to do it for me. I told you, I know, only an hour, Shinobi. This was supposed to be a 30-minute program, and it's been an hour thanks to Big Eb and his marketing perspectives. He's been pushing me for an hour every day. Dab nabbit. Oh, Joe, thank you so much. I appreciate that. Got a $1.99 coming in for me. Thank you so much. Anyway, hope you guys enjoyed today's show. Again, Fridays are one of my favorite ones. Next week, I'm probably gonna do something special if I have the time on Vitalik Buterin, because I think that he's gonna go down on the records as being one of the most important people, not only from the crypto space, but what this guy does to help change the world. It'd be very interesting, and I think that he deserves more attention because he's just a brilliant individual. So, anyway, hope you guys enjoyed today. I know we've got a lot of new people. Roxanne, good to have you with us. I got the whiskey right here. Cheers to that. If you do like the show, hit that thumbs up button. If you are new, hit that subscribe button and share it as well. Thank you guys so much. Have a fantastic weekend. Be safe. Do something fun. Make sure you guys go out there and stick to your challenges. If there are new people that want to do the challenge, I've been encouraging everybody to do this. Pick something you can do every single day. I'm doing 100 push-ups a day, and you can see a lot of other people here they've picked a task, whether it's physical exercise or doing something to help their trades and get better. Let's all be better people and make this world a better place. Have a great weekend, everybody. I'll see you on Monday. Take care. Cheers.